In the compound, Wozo had a very nice post. He was looking at the Bitcoin context, which was bearish, and was looking at Polkadot, which had a potential distribution schematic, which got confirmed at the moment of sharing. So I'm gonna explain this trade. I'm gonna go through all the steps of how you can take this trade yourself. If you want calls like this, join the compound private Discord, links in the bio. And now I will go back in time and trade it like a real trade, because when I go back in time, you see a range creation right here. But let's build context first. So let's see where we are in the chart. When you look swing high to swing low, you can look at the potential Fibonacci levels you're in for potential rejection POI. And what do we see? We see that we are exactly at the 786 when we draw it from high to low. So where we are at 786, we are on the last Fibonacci level. That means we can definitely reject from that Fibonacci POI. So now I'm going to watch for potential supply we come in, because supply indicates that we might have a reversal, and we see here a big wick which will act as supply. So this is the supply POI you got. Let's go on the lower time frame. Let's see if we can refine it even more, and we indeed see this 3-hour candle. So we see a 3-hour candle which your first point came in, and your wick supply which that other point came in, and those are the refined supply levels. So that is everything you have to take in consideration while taking the trade. You have a big inefficiency right here for market makers to fill. So this move up was to fill the inefficiency right there, go into supply. So that was what is happening right now. We are clearly in an uptrend right here, in a local uptrend. And in an uptrend, you draw your range from high to low. So when I see my range here, I'm drawing for high to low, and then you can see this is the range you're in. Now you can see for potential demand or supply POIs, and you can see this last bearish candle leaving an inefficiency right here is going to be the candle which is demand. And this demand is in the lower section of the range, which means it's very often getting taken out if you form a distribution schematic in here. Like this demand doesn't do anything that spectacular unless you have a Wyckoff in front of it. And I can also, I can already see you have a 1, 2, 3. You have a good low right there, which maybe created some good supply. And when you can see here, this is your refined supply POI. So you can see your supply POI from low to high is your structure supply POI. Why? Because you're making higher low, higher high, higher low, higher high. This is your structure. So this is your structure supply demand POI, which leaves an inefficiency right there. So that is the demand POI on the lower section of the range, which you could take into consideration while taking a distribution trade. Now we're going to watch for acceptance back inside the range before we can call this a tap 2. And you can see you had acceptance back inside the range there, but no structure in between those points. You have one bearish candle, one bullish candle, one bearish candle. That means you don't have two consecutive bearish candles on the 45-minute. So when you go higher, you see you have no structure in between those points, because in between here you had a bearish candle, but this was an inside bar candle, so this was no structure as well. So that would mean this is your tap 1 and this is your tap 2. This is one tap because there's no structure between those points on the highest possible time frame. So right now when we connect those points, we can see your tap 1, your tap 2, and right now we're going to watch for tap 3, which your Wyckoff model consists of, to trade it and to short it. So right now we are watching for price going higher, taking out this high, and go lower, break structure, and with the range low as a target. Or we can look for extreme supply or extreme demand created for a potential model 2. So that is what we are watching for right now. And you see on the 30-minute a big supply block there. So this is your last bullish candle before going down aggressively. Let's see if we got more refined supply, and it looks like we don't really have more refined supply to look for. So the 30-minute candle is what I'm gonna use, and right now I'm gonna press play and see what price is gonna do. Because we are going higher, and we push straight through that supply block. Right now, in a Wyckoff schematic, you want, preferably want, after you tap 2, time displacement to form your tap 3, so that the taps are equally spread out across the range. So right here it takes, for example, 8 hours. Right here it takes, for example, 8 hours. So that means it is equally spread out. And right there, this tap is very quick after your second tap. But here you can see you do have that 45-minute structure. You do have 2 consecutive bearish candles going down. You have more than 2 consecutive candles going up. So this is indeed structure. So now you can watch for a break between tap 2 and 3. But it's never going to be the highest probability because of that time displacement I talked about. So if you want to take this, it's still valid, but time displacement wise is not the best trade. When you look at the volume profile, you preferably want to break inside of the volume profile. Right now the volume profile is looking like this. All the volume is in the lower section of the range, with the volume area high right here, which it bounced on. So when you have that in mind, are you gonna enter a trade like this where you have your tap 2 and 3 very close to each other and your volume area in the lower section of the range? No. While Bitcoin is still undecisive as well, those are just too many factors to not take the trade. So right there, yes, it might break structure here, which is the structure between tap 2 and 3, yes, but it's not the clearest trade ever. But you indeed see price going down aggressively, and you could have been de-risked already and had a great trade. And you see the demand is taken out right now, so you can delete the demand. You didn't enter this trade, which is completely fine because it was just too risky. It was not in the volume profile, taps were too close, was an aggressive move up, it didn't align with Bitcoin, it was too risky. So now we can watch for a potential retest. So we do have our 1, 2, and our 3, because there's structure in between those points, which I said. And now we can watch for a retest POI. Price can come into to potentially go lower again, which forms a good top formation. So that is what I'm watching for. So let's look for some extreme supply. And you can go through all the time frames and look for your supply, and when you see on the 15-minute, you see, hey, this is my extreme supply. Our last bullish candle up before leaving a big inefficiency above the tap 1, which deviates your tap 1, above the tap 2 actually, because you're trading a model 1. So this will be deviating the tap 2, above the tap 2, leaving an inefficiency. So if price comes into it, you will short it and target a range low. That would be a retest POI. But right now, when price is already here, I would expect to just take out the range low. But that didn't happen. What you can see is the price indeed went up. And when you see price coming into your POI right there, because I didn't draw this yet, you do have a supply POI here as well. When you see price coming up, and you see price potentially going lower. So where's the volume profile now? It's still in the lower section of the range. That doesn't mean to make it or break it, but it does mean it gives less confidence in the trade. But we do have this supply tap, but price came so high in this supply that it made that it almost made equal highs. So right here you have your liquidity point, and price didn't grab it. So you can see this as your first move up before going down, And what is your first move up after a tap of the Wyckoff? As I always say, that is your extreme liquidity. So your first move up, before going down, your first lower high is going to be your extreme liquidity point. And we didn't grab it. So right now, when I press play again, you can see we grabbed it right there. So this will be our extreme liquidity point. We did feel some inefficiency there. We didn't go into the most refined supply, but we do have a break of structure here. We have a structure. So that didn't break obviously yet. But what happened here, guys? The return to zone got completely fucked. It got fucked because we don't have any liquidity we can work with. This was a lot of liquidity. Those were lower lows, which higher lows, which were just liquidity. Right here we had a quick move down, quick move up. What does that create? Demand. So this is your big demand zone you created. So put that on your chart and take that in consideration while you're looking at this chart and wanting to take the trade. The demand zone is backed by the volume area high as well. So let's see what will happen, because am I gonna enter this trade now, guys? Am I gonna enter this trade with my stop above this high? Not having a good bars pattern high. If you don't know what it is, watch my last video on SWE. This is a bars pattern high. If you don't have that and you break structure here into the demand, I can see price going up, going to that extreme supply and go lower. For me, again, just like this trade, yes, it's valid, but it's too risky to take it. Why not wait? And wait, there are so many opportunities in the market. Why risk on a trade you're not 100% confident about? And I have to come back on my bars pattern high, by the way, because as you can see right now, this was a good bars pattern high. So I have to give the trade that. I didn't take it myself. Wozo took it. But this was a good bars pattern high. So you actually, yes, it's valid. You could have tried it. I'm saying that again and again. But it's just, why would you take the risk, especially when you have highs building up like this? So indeed, on the higher time frame, it might look as a very good topping formation, but you can see the highs you leave behind. It's just, when you take a trade like this, you want to have 90% confidence it's gonna work, and the last 10% you take for granted, because the market is always random. But let's see if we break structure and we need break it. We have a bounce from that demand. I would not be in this trade right now. So I wouldn't have taken the L. But if you did, there's something very cool happening, because never give up on a trade. As you can see, price went higher, taking out that high, going into that 5-minute extreme supply POI. And what is happening? Your demand is mitigated. Your refined demand is mitigated. You leave liquidity behind. This is now becoming liquidity because it are higher lows. So this is all liquidity, guys. This is not leaving liquidity behind. This is leaving liquidity behind because the demand is mitigated. We didn't take out the range low yet. So now we're going to watch for a break of structure between tap 3 and the retest. And what do we see here? When you go back in time a bit more, because now it's already broken structure. Then you see price indeed broke structure. So let's watch it. Price going higher there into your POI. Price is deviating again. Your tap 2. Deviated your tap 2 into that so clear POI. It was amazing. And right there you see your potential break of structure. So here you have your structure break. Why is it your structure break? Because you have higher lows, higher highs. Boom, break this. The model is confirmed. So here's your entry gonna be. So when you see that happening, you have your short position here. Stop goes above the high for a 2% stop loss. And you target a range low for a wonderful 2.8 RR. and you can even have potentially a runner leave a runner. So their price actually breaks. You enter on the close and you see indeed that price is falling. What do you see here as well? Is that price created some demand here? Price created some demand here. So I have to be real, and I see now this demand. And why do I not care about that demand? That's a very good point, because when you go on the lower time frame, you see something very interesting here. When I delete this previous range, you can see that you had a local model in here. So at your local 1, you had your local 2, going back inside the range with time without time displacement, but with valid structure. And here's your tab 3 coming into the POI you were waiting for all day. So here, break structure. And there you can indeed see that there is some demand creation. But as you all know, I always use the most refined part of my demand. And that will be this last candle. So this is the most refined part of this whole demand zone. If you break through this, it's gonna break through it all. And you can see you had a close below it. And there was your aggressive close below the demand zone. So there actually will my entry have been. And when I draw the whole range again right now, then join the Discord, by the way, if you want videos like this every day. I make I make private videos, market updates every day of the charts. And there you can see your stop loss goes above the high and you target the range low. So here's your target for 2.44 RR, so not a 2.8, I have to be real. And this has become liquidity as well right now. So that's liquidity. This is now all liquidity. And you have Bitcoin with you, which is going lower as well. And when I press play, you can indeed see price is going lower and you are up a very nice amount already. You were up a 1.7 RR, which you could have been de-risked the trade already a bit. And your target is of course the range low. So no reason to lose any more money on this trade if you ask me. You created some supply there as well, which is another extra for your trade. And let's see if the price was in the volume profile. And it was still not in the volume profile. So when it broke structure, it was still not in the volume profile. The volume profile moved up a bit because it was first at those lows, so it did move up a bit. But it's still not in the volume profile. So that's, for example, another break, having a break in the volume profile is a reason to not go full risk, to not go 3% risk, for example. If it wasn't a volume profile and if it had a break of structure right there, you could de-risk quicker. You can take it with 2% or even higher. But you have to manage your risk, when to be risk on, when to be risk off. Here, you would just go 1%. Break was not in the volume profile. You didn't have a crazy entry right there, which has an 8 RR or something. It was just a very nice schematic. So shout out to Wozo in the compound, where he is also giving calls like this every day, just like me. See you in the Discord, link is in the bio. And ciao guys.